Singapore's stock market is expected to grow in 2026, fueled by easing interest rates and regional demand for capital. Analysts say they've been seeing more inquiries to list in Singapore as companies look for stable and trusted markets amid shifting global conditions. Chok tells us more.
With a strike of the gong, medtech firm UltraGreen.ai made its debut on the Singapore Exchange. It is one of the 9 IPO listings on SGX in 2025, the strongest IPO showing in 6 years.
A large part has to do with Singapore as a very stable, whether it's politically or economically, and from a regulatory perspective, as long as we maintain the right balance, we will continue to attract interest from companies in Asia-Pac and even internationally.
That interest is translating into a busier pipeline. Mr. Chan says he receives 1 to 2 IPO inquiries every other week, compared to the same number over an entire year in the past. He adds that regional companies are increasingly looking to Singapore as they expand supply chains and seek access to new markets.
Singapore is actually quite an ideal destination for other Asian companies to use Singapore as a base to reach out to the ASEAN and even the international markets. So we do expect more interest coming from the retail, the industrial, and even some of the technology companies.
Looking ahead to 2026, market watchers say several tailwinds could come into play. The US Federal Reserve is expected to cut interest rates, a move that could benefit REITs in particular. Supply chain realignments, greater adoption of artificial intelligence, and stronger construction activity at home are also expected to support broader market growth, despite a softer GDP outlook.
We are expecting to see a little bit of a slowdown down to 1 to 3%. Global growth is also expected to moderately slow down, but nonetheless, a lot of that growth stays there, a lot of that revenue is potentially there, so it generates a stable macro outlook.
As for investors, he says that sentiment remains cautiously optimistic, though more retail participation is needed.
We need to focus on initiatives, whether it's their investor relations team communicating more with investors and having more engagement, or whether those companies are also looking to engage some corporate strategists to work out ways to optimise their balance sheets and so forth.